Good morning, everybody, and welcome back to the Wilton Report, Princeton's only dedicated real estate podcast, videocast, etc. What an exciting time. It's always an exciting time to be in real estate. But man, oh man, the past 4 weeks have made it even more interesting than usual with everything going on a national level. So we're going to kind of take a deep dive into that and let's just get going and see what's happening in the market. So again, I do like to track this because inventory is everything. So in June of last year, which is sort of like peak season for inventory, we peaked sort of at 57 homes for sale in Princeton. This is at any given one time, obviously not for the year. 47% of that segment was above $2 million. We dropped down to 47 in July, 59% above $2 million. September, we jumped to 57, which was good, 43% above $2 million. We'll kind of fast forward to March of this year, 48 homes for sale in March, which is light, 48% of the market above 2 million. Jump to today, we're only at 52. And the staggering number is that as of this morning, 61% of the entire market in Princeton is above $2 million. I'll just say that's insane. Build more housing. There's one home for sale today in Princeton under $1 million, and I believe it has offers. So you could say technically there's nothing really available in Princeton below $1 million this morning on 4/9/25. So let's talk tariffs. And again, I always say, unless you've been sleeping under a rock, which maybe it would be preferable than reading the news, what impact will the tariff war have on housing? I'll say this, short term to be determined. So 74% of lumber imports do come from Canada. 74% of gypsum comes from Mexico. That's what your walls are made of, drywall. They are projecting that this tariff war will create inflationary pressure, which will keep rates higher, which is not what housing people want. They want more moderate rates than what we have now, even though, in my opinion, they're pretty moderate. A very conservative company foundation called the Tax Foundation. So you could say this is a right-wing type outfit. So I figured it'd be good to quote them. They estimate the tariffs will bring in $2 trillion in revenue. However, with the giveaway that the Congress is about to do with the proposed tax cuts, they will net lose income, the government. So it's not like these tariffs are going to make anything up. It really just seems to be moving money to the billionaire class, if you will. So, and that's from the Tax Foundation, and you can Google who those folks are. They are Genghis Khan level conservative. So if the tariffs do create a recession, which some people are forecasting, you can project rates to come down. However, recession has an impact on jobs. So not as many people will be likely to buy housing if they don't have a job or feel comfortable about their job. That being said, the jobs report this past month was very strong. It was projected at 140,000. It came in at 224,000. So far, jobs are hanging tough through all of this. It could be a legacy of the previous administration. I'm sure the current administration is claiming credit for it. Try to stay apolitical on this podcast. So all of these things are circling out there. And again, it's a TBD. Going to inventory on a national level, you can see if you're watching this, we are just below 2020. So we are better than 2021. We are better than 2022, 2023, 2024, which means available supply across the country, important to recognize, is moving in the right direction. Still well below 2019, 2017, 2018, almost 30% below those two numbers, 2017 and 2018, which were the highs. New Jersey has had a 15% increase in inventory from March 2024 to March 2025. It's awesome. California, 50%, Florida, 34%, Texas, 26%. So most of the states are in green. What I guess North Dakota is negative 6%. Nobody seems to want to leave North Dakota, whatever. Maine, 27% increase in inventory. Arizona, 37% increase in inventory. So overall, a nice increase in inventory nationally. However, in New Jersey, it's actually gotten worse. We used to be at 59% behind pre-pandemic levels. So when you look at this slide, and I like to track this slide, and this is brought to us by Lance Lambert from Resi Club Analytics. The guy is a real estate wonk. You should follow him on LinkedIn if you don't want to be on X. You can follow on X if you do, or Twitter, whatever it is, who cares? New Jersey is 67% behind. So when you look at the shift in inventory from March 2019 to March 2020, 2025, New Jersey has 67% fewer houses for sale. That is the picture, period, end of story. And despite everything that we like to say negatively about New Jersey, it's been a net growth state, net migration state. So there's more people, there's more jobs. And the thing that's really been behind in New Jersey is housing, precipitously. And as I look at this chart, it's the worst state in the nation for inventory. It's built out. So you look at that. This particular slide, I really like. So again, if you're not watching this on YouTube, I recommend it. And if you are watching on YouTube, give us a follow. So this slide depicts inventory in New Jersey and other states. So in March of 2017, there were 43,000 houses for sale in New Jersey. You drop down to the low point, which was March 2022, it was 12,000. And then we went to 11.9, 11.4, and today we're at 13.1. So 13,100 homes for sale in March in New Jersey. It's pretty bad on a historical comparison. It's down 67% historically. Is it getting a little better? Yeah, a little better, but it's not great. And it's not going to alleviate these bidding wars that we're seeing in the market. We'll get to that next. So today we're going to cover two towns, West Windsor and Princeton, in terms of first quarter activity only. It's hard. I could just pretty much end the podcast here and say not a lot came on the first 2 months of the year. It's going to be a late spring in terms of inventory, what's coming on the market. So that being said, West Windsor single family home price, first quarter data only. So when you look at first quarter versus first quarter, it spiked precipitously to the point where it's $908,000 for the first quarter only. And you tend to see lower prices in the first quarter as compared to year end, if the market's appreciating, et cetera. So last year, single family homes in West Windsor ended above $1 million. This year, they're at 908. But again, last year at the end of the first quarter, they were at 808. So pretty significant price jump in West Windsor. Single family days on market inched up by like a tenth of a third of an inch, went from 20 to 39. Why? There was a few more units sold. We went from 22 sold to 25. So this slide shows you that in the first quarter, we're still pretty precipitously behind the peaks of 40, 38, 25. And again, nothing really happens in the January in our market, in December certainly. So December's a quiet transaction month. So January is a quiet closing month, right? Things don't really get moving till January 15th. So as things sell from January 15th, you have to budget 30 to 40 days out from that. So it's just not a lot going on in the first quarter. That being said, the number of condo and townhouses in West Windsor went up from 14 to 23, which is a great jump. There is some new construction in that market, which goes to show you if you build it, you will sell it, and people will have homes to live. So make building normal, please. Jumping to Princeton. So overall, West Windsor is still brutal, still bidding wars. Homes still selling very quickly. None of this data is pointing to an end to the current situation that we're seeing. So Princeton, New Jersey real estate market data through quarter one. And again, if you look at quarter one in Princeton, 9 homes came on the market in January. So it was a very quiet January. As a matter of fact, I was speaking to an attorney who does real estate closings, said it was the quietest he had ever seen it. Same thing with a home inspector. There was nothing happening in the markets for, so to speak, in January. That being said, the first quarter of last year, single-family homes came in at an average of 1.369. This year, 1.764, which is a huge jump in average sold prices. Single-family homes jumped from 22 to 25, so that's good. A little bit, again, an incredibly slow start to the year. Days on market, about flat, 60 to 62, up from the low of 46. It's not like things are selling slower. I'll explain what's happening in a second. It still is over 100% listed sale price ratio for single family across every segment. And keep in mind that over 60% of the Princeton single family home market, the entire market in Princeton today is 61%. So if you exclude the condos and townhouses, I'm going to assume that probably 65 to 70%, I'll figure that out for the next broadcast, of the single family home market in Princeton is above $2 million. Kind of crazy. So when you look at the under $1 million average sold price, it actually has been coming down. It peaked at $863 the first quarter, it ended up $803. Why is that? we're seeing I think we're seeing more under 1 million houses sell this year. We just had one on Mount Lucas Road, came on the market, had 5 or 6 offers, sold immediately, almost 100,000 above the asking price. So we're just seeing more inventory in the under 1 million segment come on. Life does take hold. People have to move, which is good. Days on market for single families under 1 million jumped a little bit to 43. There was some fluky lots that screwed that up. But that being said, if you're a buyer in the $1 million segment for a single family home, 6 closed in the first quarter. And it went from 2023 to 2025, 676. In 2017, it peaked at 31. So there's just not a lot in that price point. Single family home under $1 million, 102% of asking price. Obviously, this is the slide that shows single family 1 to 1.9. And again, big jump in average price. Last year, the quarter ended at 1.4. This year at 1.54 million. Not the biggest story. Days on market inched up a little bit in that. Nothing negative. Most things are selling. There's a couple of houses that have been lingering, lot issues, water issues, etc. This is the big picture here. Last year, we sold almost 30 single family homes from 1 to 1.9. This year in the first quarter, there was 11. So go back to that slide where I said inventory is inching towards that 2 million mark overall in Princeton. It's kind of crazy to think that, but you can see this happening. The jump to here. So the Princeton, when you take $2 million as an average sale price, in 2012, that was 3.5 million. That was the average sale price for homes above 2 million in Princeton. Today, it's 2.7. So what does that mean? It means that houses that used to be 1.6 are 2.1. There's more of those than super luxury. Days on market in the $2 million segment dropped almost by 60%. Last year, first quarter was 177. This year, 71. Massive activity in the luxury market in Princeton. And the number of homes sold, I have to talk to my data person. It jumped precipitously. In 2017, 1 home above 2 million sold. This year, it's not even on the charts. It's above 8. So we're seeing a massive spike in luxury activity in Princeton in terms on the buy side and the sell side. We'll see if that continues as equity gets wiped out in the stock market, or maybe people just go to cash and want to park it in real estate, which is, I think, what's happening. The condo average sold price, this is frightening, went from 903 to 1.2 million. First quarter, a couple of big ones did sell, which does skew those numbers. But again, only 4 condos and townhouses sold. So if you want to know what to do to solve the housing crisis in Princeton, build condos. Build condos and townhouses. They will sell out. Put a moratorium. Don't let investors buy them. Make them exclusive for homeowners. Whatever in the HOA deed. But that's the missing middle in Princeton, if you want to know what it is. So that's the wrap up for the first quarter. I'm sorry to go so quickly this morning. But it is a busy time of year for all of us. If you have any questions, 609-773-8054, call or text. If you have not, please subscribe to the podcast on the preferred venue on which you listen. Talk to you soon.